Georgia. I want to go to Dan Geltrude because the markets were hot in another way, a free fall, a sell-off that has a lot of people, well, very hot and bothered right now. Dan's an accountant by training, but he follows these markets as good as the best of them. And Dan, the sell-off yesterday has reignited fears. Is this going to be another financial meltdown? Is this going to be another 1987 stock market crash or 89 free fall? You heard those comparisons. Are they justified?
I don't think they are right now, Neil. I think all that kind of talk about a recession is premature, and it's an overreaction. If we look at where we were just a few days ago, what's really happened? You know, what was the big change that we experienced? Now, we did see some jobs numbers that came in much lower than expected. We saw unemployment higher than we thought it would be. Okay, I get that, but that wasn't enough in my mind. So has it simply been a situation where Wall Street has now caught up to what Main Street has known all the time? People are hurting. Inflation has really taken a big bite out of people's pocketbooks, and we see things going in the wrong direction. Personal debt up, savings accounts down. So I don't know why they realized that this week, but I still think it's premature to say the R word.
All right, and we should point out that we did gain 114,000 jobs. It's not as if we lost, 114,000 jobs. But I can understand, is this the preview of coming attractions? Because to your point, my friend, all the major market averages, the Dow, the S&P 500, the NASDAQ are still up year to date and actually up very much over the last year. I think the NASDAQ close to 12% year to date, more than 20% over the last year. The S&P 500, 12% year to date, close to 20% over the last year, and the Dow itself about a 5.5% gain, but double that over the last year. So it doesn't take long for that to be undone. I get that, but you don't see the makings or a Fed panic that anything they do, whether they cut a little or a lot, that makes this worse.
Neil, look, I do think people are overreacting. However, that doesn't mean this isn't the beginning of a trend. Now, as it pertains to the Fed, right away, things go sideways for a little bit. Everybody's saying we need cuts, we need cuts. You know, the Fed has to be careful about this. And let me tell you why. We have things going on in the Middle East that could be a potential, let's say, unexpected or black swan event, Neil. That what if things really escalate between Iran and Israel, because we're right there? How does that impact oil prices? If that goes in the wrong direction, we could absolutely have a spike in inflation, and now the Fed really looks bad. So I think they have to resist jumping on this cut bandwagon. I know everything's going in that direction, Neil, but I would caution just to hold on a little bit. Let's see directionally where we go.
All right, because, now you're getting the pressure on Jerome Powell and his buddies to get ahead of this. And, it looks like he had been organizing and orchestrating a good soft landing, whatever you expert brainiacs call it, and now he's suddenly an idiot. I don't know if that's a fair criticism here. What do you think?
Well, look, Neil, he's the one really in charge, right, in many ways. So he's going to get the blame if this goes in the wrong direction, even per se if it's not his fault. Something unexpected happened, all the fingers are going to be pointed at him. Should he be in that position? Not really. The Fed should not be so involved, but they did get involved. They were increasing those rates dramatically up through this point. So now he has to own how we get back to quote unquote normal.
Yeah, but normal would be what? What kind of cuts do you think we're looking at? And I know you're not necessarily a big fan of that kind of response, but where do you think we're going?
Well, ultimately, Neil, if we're going to get back to 2% inflation rate year over year, by the way, because that cumulative impact of what we've experienced for 3 years, that's not receding. It's just slowing it down. So where do we get to that perfect point where we could keep things normal? So what do I mean by normal? What's the right interest rate, Neil, that takes us to that 2% target? Whatever that is, that's where we should be.
Got it. All right. So around 5.25, 5.5% right now. You could afford to go down another point from here, even inflation-adjusted terms. But we'll see what happens. Dan, you're the best. Thank you, my friend, very much.